Game. Financial statement analysis for insurance companies. We shall now proceed to insurance companies. Now, why do insurance companies exist? Why do insurance companies exist? Because of the existence of risk. What is risk, by the way? Risk is the possibility that the expectation will not be met. Risk is a possibility of a deviation from expectation. Yung inaasahan mo, hindi yun yung natupad. Okay? If you are expecting to earn 1 million and you only earned 900,000, that the probability of that to happen will be considered as risk. Okay? Risk is the likelihood of a deviation from expectation. When we talk about the word risk, it may mean either of the two. It can mean a pure risk, where there is no possibility of upside, and speculative risk, where there is a possibility of upside. Pure risk. Pure risk happen. Pure risk. Pure risk is a phenomenon where what can happen is nothing happens or something bad will happen. Example will be the risk of fire. Will the building be hit by a fire? So when a fire happens, that's an unfortunate event. When the fire doesn't happen, that is a neutral event. Okay, there is nothing good, shall I say? There is no counter fire, right? Okay, it's either the building will be burned or the building will not be burned. So of course, that's what a pure risk is. The risk of a typhoon to damage our property, earthquake to damage our property, such hazards would be classified as risk. To be specific, pure risk. It is either nothing bad will happen or something bad will happen. Nothing bad will happen or something bad will happen. Pure risk. Speculative risk, on the other hand, this is a risk that has a possibility of an upside. Remember that in pure risk, it's either you get what you expect or you fall behind that. In speculative risk, you get what you expect. It can go below that expectation or above that expectation. Speculative risk has an upside. The risk of operating a business, okay, is called a speculative risk. It's either you'll just break even, you will earn, or you will lose. Speculative risk can also be described as gambling. Okay, gambling can also be described as a speculative risk. It's either you'll just get back your money depending on the game. So let's say we're playing poker. It's either you're going to lose, just going to break even, or you're going to win everybody else's money. Okay, speculative risk. So pure risk is a risk wherein there's no possibility of upside. It's either what you expect is what you get, or something bad will happen. So there's a downside. While speculative risk, there are three possibilities. You get what you expect, you get more than what you expect, or you get less than what you expect. Insurance companies is all about securing pure risks. Okay? We're going to talk about pure risk for the benefit of highlighting the importance of insurance companies. It is the pure risk which is generally insurable. It is the pure risk which is generally insurable. Let me ask you this question. Does an insurance company eliminate pure risk? Does an insurance company eliminate pure risk? Anyone? Anyone? Anyone can turn on their microphone and then speak. So my question is, can an insurance company insure, sorry, can an insurance company eliminate risk? Is it possible to eliminate risk? Yes or no? Okay, Helen, not totally, sir. What do we mean by not totally? Is it a yes or a no? Or, yeah, that's not totally, meaning it's partially. What do we mean by that? What do we mean by that? Anyone? Okay, Miss Malina, Maria, you can reduce the risk. Okay, so you believe that the risk can be reduced. Okay, anyone else? Anyone else? Any more?
Sir, I think
Uh, yes.
I think insurance doesn't necessarily reduce the risk of your business, but it is a financial tool to protect losses from like certain risks like fire,
Okay,
earthquakes,
to
and stuff.
protect the losses.
Yes, sir.
So, what does it mean to protect the losses? Where did the risk go? If you are protected from the risk by the insurance company, where did it go? Okay, that's true. It's a protection. But where did the risk go? Saan napunta yung risk? Okay? Saan napunta yung risk? Okay. So ako na. Ako na ha. Okay. Risk is not eliminated, but rather it is just transferred from the insured to the insurance company. Inako ng insurance company yung risk. Nakuha niyo? Inako ng insurance company yung risk. So when it comes to insurance companies, okay, they do not eliminate the risk. They simply transfer it to themselves. Okay? So if you have an insured here, the insured will transfer the risk to the insurance company by paying a premium. Uy, insurance company. Insurance company. Okay? Insurance company, sa'yo na tong risk ko. Masunog yung building, ikaw na bahala dito. Okay? Babayaran kita, basta akuhin mo yung chance na masunog, masira yung building. Baka mamatay ako, ikaw na bahala sa pamilya ko. The insured would have to pay premiums to the insurance company so that the insurance company will take the risk. Lost income, lost property, you name it. The more accurate term is the transfer of risk. This is how insurance companies protect you from the risk. The word protection is also correct, but the what I am trying to emphasize here is that the risk was simply transferred. It was not eliminated. But again, like any transaction that involves strangers, there is information asymmetry. There is information asymmetry. Ano nga ba yung ibig sabihin ng information asymmetry? Information asymmetry, the level of information is not equal for both parties. To be specific in our context, the insured is not really someone that the insurance company knows totally. The insurance company is a company, okay? It has employees and agents. The agent of the insurance company may not even totally personally know the insured, okay? But this insured is purchasing insurance. Now, there's information asymmetry. The insured knows about him or herself. The insurance company does not know that. The insured knows him or herself. The insurance company doesn't know. Okay? Information asymmetry means availability of info is not the same for the transacting parties. Because of information asymmetry, this can lead to, ano ulit yung dalawa? Dalawa yun, di ba? Information asymmetry, katulad nung sa bank, this can lead to adverse selection and moral hazard. Okay? It can result to adverse selection and moral hazard. Okay. What is adverse selection? What is adverse selection? Let's have a recap. Adverse selection is a situation when undesirable results occur. Undesirable results occur because two parties in the transaction have asymmetric info. And this happens before the transaction. Okay? Can anyone give me an example? Can anyone give me an example of adverse selection in the context of insurance contracts? Anyone?
Sir, may I try
Yes.
po?
Yes, John Mabel. Yeah, sure.
An example can be po, example, you would want to insure a house, pero that house po has the risk of how can I say this? It's so old. It has the
Okay, get
possibility
your
to
point.
collapse
Sige lang.
on its own
Tuloy mo
po.
lang. Tuloy mo lang.
Ayun po. It has the possibility to
Okay. Sino
collapse on its
nakakaalam
own.
yung possibility ng collapse? Sino nakakaalam?
Yung owner po or yung gustong
Okay.
mag-insure.
Okay, thank you for that, Jamabel. That's correct. So, in an insurance, the person has cancer and buys life insurance. In the case of life insurance, in Jamabel's example, the person's house is dilapidated and mataas yung risk ng fire. Mas alam ng tao yon kaysa dun sa insurance company. The same principle applies. Okay? The person knows that he or she has cancer and then goes to the life insurance company to purchase a life insurance. Similarly, in a case of fire insurance, the person knows the existence of fire hazards in the house better than the insurance company. Okay? So, in the case of insurance, okay, the insured, okay, whoever is purchasing the insurance has more knowledge about the object of the contract. Okay. Any idea paano natin to malalabanan? Any idea kung paano natin to malalabanan? How are we going to solve the issue of this type of problem?
The insurance
Ay,
company investigates.
okay, very good, Miss John, no, John Dominic. Okay. The insurance company will have to gather other information. Okay, other information. Ano bang itsura ng bahay na yan? Well, dito ako, bumili ako ng fire insurance dati. Hindi naman sila nag-investigate. Siguro kampante sila dahil naka-condo. Tapos partner yung bank tsaka yung condo developer. So, in any other insurance contract, gathering of other information is crucial. In the case of life insurance and HMOs, medical examinations are even required for a certain level of insured amount. Kapag umabot sa certain amount, kailangan talaga may medical examination. Example, suddenly, no? Suddenly, I decided to purchase insurance worth 100 million pesos. Di ba nakakapagtaka, no? You would wonder, kung matagalog, you may wonder, no? Bakit ako bibili ng napakalaking insured amount, di ba? Okay? So the solution to adverse selection is to gather more information. Investigate, no? Investigate about the insured or whatever, the property, the health condition, depending on what kind of an insurance contract are we talking about. Okay? Moral hazard is a situation where one party takes an excessive amount of risk or reckless behavior because it knows another will bear the burden of such. This happens after the transaction. This happens after the transaction. Okay ba? Okay. So, can anyone give me an example of a moral hazard? May example ba kayo ng moral hazard? Anyone?
Car insurance, sir.
Yes, Dominic. John Dominic, okay. Ano yung car
Car.
insurance?
For example, the person took an insurance for his car, then reckless driving na after.
Okay. Yun din example ka, no? Insurance, a person drives car carelessly after purchasing a vehicle insurance. Okay, very good. So, moral hazard happens after the transaction. Nung walang insurance, maingat ka, no? Ayaw mo ng gas-gas, no? Ayaw mo ng gas-gas nung walang insurance. Pero nung nagka-insurance na, ang nangyari, wala ka nang pakialam, no? Magasgasan man, yung insurance na bahala dyan sa mga gas-gas na yan. Okay? Of course, you're not going to be reckless about your life. Okay? Medyo weird yon. Kunyari, may life insurance ka na, no? Kaya mag-skydiving ka na, no? Mag-bungee jumping ka na. Yeah, it's also possible, no? That you're like that. So that's the point of moral hazard. It happens after the transaction. Any solutions to the moral hazard? Okay. Bibigay ko muna yung solutions ng moral hazard sa insurance company. So, you can have a deductible clause. Now, if you are, say for example, purchasing a car insurance, some car insurances, they have a deductible clause. Deductible clause. So, ano yung deductible clause? Example ng deductible clause, kunyari, yung first 5,000 pesos, the insurance will not cover. Example, may gas-gas. Okay, there's a minor scratch. If there's a deductible clause wherein the insurance tells us that the first 5,000 is not covered, we are less likely to be careless about the gas-gas, no? About the scratch. Sabi ng insurance company, yung unang 5,000 sasaluin mo, 5,000 to 100,000, ako na bahala. So the insurance company will cover for a total wreck on the car, no? For a total damage of the car up to a certain amount. But the first 5,000 pesos, we call it a deductible clause. Yung mga minor na bagay na nagkakaroon tayo ng moral hazard, wala na akong paki dyan, si insurance company na bahala dyan. Okay? Yung mga ganong klaseng bagay, sasabihin ng insurance company, hindi niya sasaluin. No? First 5,000, hindi niya sasaluin. After 5,000, saka niya sasaluin. Okay? What other countries have is they increase the premium for certain actions. In more advanced economies where they can monitor tickets, no? Driving tickets, no? Driving tickets. Kunyari, meron kang overspeeding. The insurance company can monitor your record for overspeeding. They will charge you a higher premium. A higher premium. Okay? So, yun. They will charge you a higher premium if you have a lot of, shall I say, speeding tickets. No? Beating the red light, speeding, those dangerous violations. Okay? We call that increased premium for certain actions. Meron may kawawa rin, no? In the height of Black Lives Matter, yung mga riot related to Black Lives Matter, nadamay yung mga business owners, no? Small business owners. When their stores got burned, nasunog yung mga tindahan nila, the insurance company would now require a higher premium for insurance after what had happened. So kinover naman ng insurance, no? Say the BLM protest, they destroyed this business. Okay, kinover naman ng insurance. Kaso, after that, they will increase the premium because there's a high chance in the neighborhood that hindi magandang neighborhood, no? Okay, so that is the solution for moral hazard. Okay, insurance. The parties on insurance include the following. Insured. Insured is the one covered by the insurance. We call it the insured. The insured will not purchase the insurance directly from the company. What the insured can do is to do it via an agent. Insurance agent. The agent's duty is to sell the insurance policy. Okay? Most agents nowadays, they call themselves financial advisors because of the stigma that they get Pag sinabing ahente, ang magbebenta yan, no? So they rebrand themselves. They call themselves financial advisors. The insured is the one purchasing the insurance policy. Then it has to pass, he or she has to pass through an agent who sells the insurance of the insurance company, who sells the policy of the insurance company. Agents are generally not employees of the company. Generally, agents are simply agents. They are earning commissions rather than being paid salaries. Okay. Inside the insurance companies, the following employees are of key importance. We have the underwriter. We have the underwriter. The underwriter will be the one to deal with the issues and terms of the policy. Okay? The rules, no? The terms of the contract. The underwriter is the one who is going to work on that. Okay? Ano ang isasama ni underwriter? Yung covered amount. Okay, kung ganun yung covered, paano kapag hindi naman siya namatay? Meron bang mga riders? You know what riders are? May mga attachment dun sa life insurance na for accident, disability, etc. Okay. Issues and terms is under the scope of the underwriter. Now, the insurance company would also be concerned about your age, your sex. To be accurate, I use the word sex rather than gender because the word gender, I do not know. Many people are debating that they are different, diba? Yung gender, iba yun sa sex. But what's the insurance company is more concerned about your sex. Why? Because men are more likely to die earlier than women. Tama ba? Mas madaling, mas mabilis mamatay yung lalaki. Well, obviously, no? Because men, we do not show our anger. Kinikim-kim natin. And of course, we are very adventurous, no? Kapag lalaki. Okay? So, the actuary is a statistician, statistics expert hired by the insurance company to determine the risk premium. The older you get, the higher will be the amount that you will have to pay. Okay? Why? Because you are older. The older you are, the closer you are to death. Tama ba? Okay. So, that's reality, no? The older you get, the closer you are to death. So the actuary will do some statistical calculations to calculate for the risk and determine the premium to be charged from the insured. Okay? Is the insured a smoker? If it is a smoker, if he or she is a smoker, there will be an additional payment. Next, we have the insurance claims adjuster. If there was an error in the beginning, nagkamali siya ng paglagay ng age, nung binigay yung birth certificate, the insurance claims adjuster will make some adjustments. Okay? Ay, 15 pala siya, hindi pala siya 17. So, dagdagan yung bayad kay insured kasi mas bata pala siya. Kung mas bata siya, edi dapat mas malaki yung matatanggap niya. Kasi malaki yung binabayad niya pang 17. Pero 15 lang pala siya. Nung namatay siya, edi dapat mas malaki yung matatanggap niya kasi nasobra yung pagbayad niya. Anyway, something like that. Insurance claims adjuster. Okay? The following are the insurance financial statement ratios. Common ratios for insurance companies. Okay? Knowing now the business of insurance companies, the next thing that we would be interested in are the ratios when we conduct the financial statement analysis. The ratios include, number 1, expense ratio. Expense ratio is calculated as underwriting expense divided by the net earned premium. What's the net earned premium? Think of it as the net sales revenue of the insurance company. The net earned premium is the net sales revenue of the insurance company. Expense ratio, underwriting expense divided by net earned premium. Loss ratio, claims expense divided by net earned premium. Claims expense divided by net earned premium. Again, net earned premium being the net sales revenue for the insurance company. Combined operating ratio. This is the sum of underwriting expenses and claims expenses over the net earned premium. In other words, the total of these two. The total of these two. For profitability, we have insurance margin. This is like the profit margin of the insurance company. Insurance profit divided by the net earned premium. Okay? Then finally, we have the RBC2 ratio. This is the equivalent of the capital adequacy ratio for banks. Total average capital, instead of risk-weighted assets, insurance companies have another calculation. We call it the RBC requirement. RBC requirement. RBC2 ratio is like capital adequacy ratio, but has a more complex calculation. More complex calculation. Okay? Let us go to the introduction to net earned premium. Para maintindihan nyo kung paano kinakalculate yung sales ng insurance company, we will use the following illustration. Introducing the net earned premium. For example, gross written premium, annual premium sold. Written to ha, hindi to earned. Gross written premium, annual premium sold is 12,000 pesos. 12,000 pesos. How do we know the gross earned premium? Ulitin ko ha. Gross written premium. Nakabenta tayo for the insurance company ha. We were able to sell a policy worth 12,000. The insured is going to pay 12,000 to the insurance company. Nakuha nyo? Magbibigay ng written premium ng 12,000 yung insured sa insurance company. Gross written premium, this is usually an annual amount, 12,000 pesos. Naka-annual yung amount na yan. Okay. How much is the gross written premium? Nakabenta tayo ng policy na 12,000. This is my question to you. What is the gross earned premium? Gross earned premium. Okay? Gross written premium, 12,000. What is the gross earned premium? Gross written premium, 12,000. What is the gross earned premium? Gross earned premium. Okay, this is my question to you. What other variable do we need in order to answer that question? Tipin nyo. What other variable do you need to answer that question?
Number of months or years.
Okay. So, yeah, it would be the number of months before the accounting period will end. So, say for example, nakikita nyo to? Nakikita nyo to, no? Say for example, okay, we are using a calendar year. The accounting period starts at January 1, ends at December 31. If we're able to sell the premium, 12,000, on January 1, by December 31, matatapos na yung accounting period. Question, magkano ang gross earned premium kapag pinenta natin ng January 1, year end is December 31? How much is the gross earned premium? Anyone? Magkano ang gross earned premium? if we're able to sell 12,000 pesos gross written premium at January 1, and the year end is December 31. By year end December 31, how much was earned? What's the gross earned premium? Magkano dyan masasabi natin kinita na? Kinita. Tagalogin ko, kinita. Earned. Masasabi mo, kumita yung insurance company. So, the correct answer is the gross earned premium, GEP, 12,000. Kung nabenta siya ng January 1, the premium is good for annual to ha? Good for 1 year. By December 31, the insurance company already fulfilled its obligation for the 12,000 pesos. So the gross earned premium is 12,000 pesos. I hope that's clear. So we're able to collect 12,000 from the insured on January 1. By December 31, the entire amount is already earned. Tignan natin na kung nakuha nyo. What if we sold the premium, we sold the policy October 1? The gross written premium is 12,000 pesos. Binenta natin siya ng October 1. Come December 31, how much is the gross earned premium? Anyone? How much is the gross earned premium? Very good. The correct answer is 8,000 pesos. October 1, November, December. October, 1 month. November, 1 month. December, hanggang year end, 3 months. 3 over 12 months has passed. Come December 31. Out of the annual premium of 12,000, divided by 12, that's 1,000 per month. 3,000 is already earned. Masasabi natin na kinita na yung 3,000 pesos. I hope that's clear. So there's a difference between gross written premium and gross earned premium. Gross written, this is an amount, usually, this is an amount already recorded as something that the customer has agreed to pay or has already paid. Kung yung customer, kung yung insured nagbabayad ng annual premium, bayad na yan. Pero hindi mo pa masabi na kinita na natin yan, we cannot say that we already earned that unless the period of time has passed. If entire 1 year has passed, the 12,000 is already earned. If it is written on October 1, only 3 months has passed. So out of the 12,000 written premium, only 3,000 will be considered gross earned premium. Okay? Deduct the reinsurance expense from the GEP, you shall arrive at the net earned premium. Okay. Net earned premium is the net sales revenue. From the gross written premium, you may arrive at the gross earned premium. How do you arrive at the net earned premium? Deduct the reinsurer's expense. Reinsurer's expense. Some contracts are so large that the insurance company cannot handle the entire risk. Nakuha nyo? Hindi kaya ng insurance company na siya lang yung nag-i-insure, kaya yung in-insure niya, pina-insure pa niya sa iba. Nakuha nyo? Yung in-insure niya, pina-insure niya pa sa iba para dagdag insurance. We call that reinsurance. So yung insurance, rina-insure. So dahil nakakumita yung company ng insurance, that is a gross earned premium, meron pa siyang babayaran sa mas malaking insurance or reinsurance company. Okay? We will deduct reinsurance from the gross earned premium. Gross earned premium. Deduct the reinsurance expense from GAAP. You will arrive at net, the net earned premium. The net earned premium is your net sales revenue. Your net earned premium, look at the laser pointer. This is your net sales revenue. Parang gross sales minus deductions, Yun yung net sales mo. Okay? I will give you some time to look at the items in the balance sheet and the income statement of a simple insurance company. Tingnan nyo lang yung mga items, appreciate the existence of different items, the amounts, saan malaki yung amounts. Okay? And then anong makikita natin dun sa income statement ng insurance company. Take some time to do that. And whenever you are ready, okay, just take your time. Calculate the following ratios. Okay? Calculate the following ratios when you are ready. Okay. Okay naman tayo? Do you have any questions on the items that you find in the balance sheet and the income statement? Meron ba kayong mga kakaibang nakita? Game tayo? Sige. Calculate the expense ratio. Before that, let's appreciate the balance sheet first. Most of the insurance company's assets are put into investments. They collect the premium from the insured. They collect the premium from the insured. They put it in an investment vehicle. Ano yung mga investments nila? Pwedeng stocks, pwedeng bonds, so that the time comes when the policyholder will die, the insured will die. Or in the case of fire insurance, nasunog yung bahay niya, okay, wag sana. What happens is, there will be an amount reserved Okay, there will be an amount to be already allocated for such. There's an amount that's invested in order to cover for those future catastrophes. Loans and receivables, some insurance companies would allow their policyholders to receive loans. Okay? Pinapautang nila yung policyholder. Then that's the majority of the assets of the insurance company. Liabilities, the majority of the liability is the insurance contract liability. This is the future payment. The future payment for the people who's going to die, who's going to get sick, who's going to meet an accident. Okay? The, sino to ulit? The actuary. It is the job of the actuary to do the complex calculation. How would you calculate the probability of someone to die next year, next year? Okay, in a group of 1,000 people, how many will die? Nakuha nyo? It is a statistical technique. We can create an insurance contract liability from that. Okay? Magkakaroon ng liability because that's a future payment. Then also in the liabilities and equity, some insurance companies pay dividends. So if there's a dividend payable, hindi pa bayad, babayaran pa lang. Then you have accruals, then the capital out items, no? The equity items. What about the income statement? The income statement has the following. The gross earned premium less the insurer's expense is the net earned premium. Now, the net earned premium is the amount earned from the collected premium. It has also investment income. Remember, a large chunk of the assets, almost the majority of the assets are in investments. They earn investment income, giving you the total revenue. In the income statement, the expenses can be broadly categorized into two. Those expenses which we call benefits and claims, those that we incur as a result of an unfortunate event of the policyholder or the insured. Okay? Namatay yung insured, kaya dapat bigyan siya ng bigyan siya ng ano tawag dito? Bigyan siya ng amount, no? Bigyan siya ng claim, yung claim, no? Benefits and claims expense. Then those expenses incurred in the process of selling insurance, there will be underwriting expenses. Habang nagbebenta ng insurance, operating expense, you can call them underwriting expense. Revenues minus benefits and claims minus underwriting expense. You have your earnings before tax. Less income taxes is your earnings or profit or loss. Okay. There's a question here. Sir, same lang po benefits and claim expense sa claims expense? Yeah, same lang yan. Benefits and claims, they are loosely categorized as claims. Claims din yun. So what I want you to do is to calculate the expense ratio, loss ratio, combined operating ratio, and insurance margin. I will give you a few seconds to wrap up. Okay? Organize your solution. And then I'm going to ask you what these ratios are.
Sir,
Yeah, question?
is the
Yeah,
yes,
question.
sir. Is the insurance profit the earnings or profit or loss of the on the income statement of the insurance company?
Ganito na lang. Let's just use the before tax item. Hindi ko pala nilinaw, no? For the insurance margin purpose, let's use the earnings before tax.
Okay,
Huwag
thank
niyo
you po,
muna
sir.
tanggalin yung tax. Okay, thank you. Okay, anyone? Expense ratio. Expense ratio, anyone? Okay, very good. That's 36.84%. So the expense ratio is calculated as underwriting expense, that's 14, divided by the net earned premium of 38. 14 million over 38 million, 36.84%. Now, to give you some perspective, you earned a premium of 38 million. The insurance company earned 38 million premiums. Yun yung kinita. In the process of doing it, we operate the insurance company. The insurance company will have to cover 14 million pesos of underwriting expenses. The underwriting expenses, therefore, it ate up 36.84% of the earned premium. Okay? We call this the expense ratio. Underwriting expenses, this is generally fixed. Fixed. This is generally, shall I say, hindi naman fixed. Predictable, no? It's not volatile. The underwriting expenses, these are predictable. When I say predictable, more or less in the next year, similar amount would exist, assuming there's no increase or decrease in the business. Okay? Underwriting expenses divided by net earned premium. Okay? So 36.84% ng net earned premium, it is the net revenue of the insurance company, is only to cover the underwriting expense. Okay, what about the loss ratio? Any other one would like to answer? May gusto bang sumagot? Anyone? Okay, may sumagot. Thank you, David, and yeah, ulitin na si Mr. C. Lauren, okay. Oh, so the loss ratio is the claims expenses divided by the net earned premium. Now, kung titingnan natin, no, kung titingnan natin yung mga nag-claim, 39 million talaga. Our earned premium is only 38 million. Okay, it means that we were not able to cover those benefits and claims. Okay? We're not able to cover. It's not covered by the net earned premium for the year. Now, when you are going to study the claims expense or the loss ratio, it is preferable to look at a longer time frame. Pwede kasi malas itong year. Kunyari, itong year na to, nagkaroon ng ondoy, no? Nalala niyo yung ondoy, yung mga kotse lumulutang. Okay. If you are a car insurance company who covers acts of God, you are covering acts of God. Tapos, yung mga kotse na ondoy, no? Nalala niyo yung na ondoy, talaga maraming namatay. Tsaka yun nga, kung car insurance company ka, lumulutang talaga yung mga kotse dyan yun sa mga mababang area sa Manila. Okay? Sa Metro Manila. So, maybe it's just a bad year for you. But looking at all other years, everything is fine. When you evaluate the loss ratio, do not evaluate the loss ratio only for 1 year. Doing so might make you overly pessimistic or optimistic. Kunyari, sinuwerte ka naman, walang namatay, no? Walang namatay. Wala kang kinover na insurance. It's unlikely to happen, but malay mo, mangyayari yun. So, that being the case, you cannot simply look at just 1 year, okay, to make any conclusion. Tumingin kayo ng 3, 4, or 5 years. Better 5 years. Okay, what about the combined operating ratio? Anyone? Okay, very good. It's 139 something. 139.47%. So add these two, claims and underwriting expense, and then divide by the net earned premium, or you can simply combine, literally add up the expense and loss ratio. You would end up with 139.47%. So you're actually incurring a lot of expense and losses relative to your net earned premium. Yung net earned premium mo, 38 million lang. Underwriting expense plus benefits and claims expenses, they are way above. They are above your net earned premium, which is not good. Because the combined operating ratio includes the loss ratio, the same can be said. Do not look only at 1 year. Look at a number of years combined, average for a number of years in order to make an assessment of the company's combined operating ratio. Okay? Last one, insurance margin. Insurance margin is just like the profitability margin for an insurance company. So the insurance profit is 7 million if we will look at the before tax item. Divided by 38 million, that's 18.42%. Sir, bakit kumita tayo? You might wonder, sir, why is this positive? Hindi ba yung benefits and underwriting expense, they are above the net earned premium? Anyone tell me, bakit meron pa tayong kita?
Due to the investment income, sir.
Okay, very good. Because we have an investment income here. Meron kasi tayong investment income. Although yung net earned premium bitin, yung investment income, kaya niyang saluhin. Kaya niyang saluhin. Okay? Kahit itatax mo pa, magkakaroon ka pa ng profit. Okay? So, that's the point. The point is, you can have an insurance profit even though you have a combined operating ratio above 100% because there is investment income. I'm going to talk about regulations next meeting. Next meeting is, next meeting. Wait lang ha. Kasi Holy Week na. Next meeting is Monday or after Holy Week na? Ano yung schedule pala ng DLSU? When does the Holy Week begin? I mean the holidays.
31st po.
Okay. It will begin on the 31st. In other words, we still have a class on Monday. Okay. Sige. So 31st is a Wednesday. Okay, 31st is a Wednesday. So I will not meet you already on Wednesday because it's already the start of the Holy Week vacation or whatever you want to call it. The Holy Week no classes period. Okay, so on Monday, we will proceed to insurance regulations. On Monday, we shall proceed to insurance regulation. I think I would stop recording now